Yeah, we forgot to record. I just recorded it now.
No, it's fine. It's fine. No, she said she now understands.
There's a question from, there's another question from Novella? Novella?
Yes, thank you. I'm confused. Looking at question C, where management decided to increase production capacity, and they bought deck machinery on credit for 88,800.
Let me share. Yeah, let me go back. Yes.
And then one of the Zebra machines was traded in, then reducing the amount that is owing to Amy to 69,300. I was under the impression that you will take the 88,800. Sorry, you minus the 69,300 from 88, because instead of us owing them 88,800, we now owe them 69,300, which means the difference will be the trading in amount. So I'm confused. Maybe I misunderstood. I don't know.
Because remember, we bought on credit for how much? 88,800.
Yes.
Now we reduce the amount owing by trading in the machine. Instead of paying 88,800, now we are going to pay the difference because we already traded one of the machinery to deck machine. Now we are no longer owing them.
88.
Sorry, we are no longer owing Amy Limited 88,800 because we traded one of the machinery to them to 69,300. Instead of owing 88,800, we owe the difference between 88,800 and 69,300.
May I ask how much was the trade-in value?
Can I get
The
in
trade-in value was 69,300.
Brajo, yeah, I think yes. We might be missing it there. The actual trade-in value, like the student is asking, I think she's right. The actual trade-in value of the machine on the date of trade-in was what is on the T account. So I can safely say the student, yes, I think she understands the principles correctly. That's what I can say.
Okay. Oh, thank you, Mr. Maraisani. Are you
covered, me?
I think I'm still a bit. How
No,
much is the value?
I'm saying, let me finish it. I'm saying you are right of what you are saying.
Yes.
Yes, you are right. You are perfect. Perfectly correct. Are you happy?
All right, thank you.
Yes, because the trade-in value is the difference between the two amounts that we see.
Yes.
Yes, that's correct.
Okay.
Are you
Thank
happy?
you.
Thank
Yes.
you. All right. Thank you. Yes, you can continue that day, Joseph.
Is there any question on the machinery realization account? Because this one, you must know the 6 steps. And the 6 steps are under our study unit 11. Yeah, there were 6 steps. Which says record the depreciation expense on the disposed assets from the beginning of the financial period up until the date of disposal. And after you transfer the total accumulated depreciation of the disposed assets from the date the assets was purchased until the assets was sold to the credit side of the realization account. It was what we did here. And the other step saying transfer the cost price of the disposed assets to the realization account. This is another steps. We transfer the cost price of the disposed assets. Remember, there were 2 machinery and we disposed one. If you say 88, 83, 2800 divided by 2, it will give you 41,900. And the other step saying transfer the cost price of the disposed assets to the debit side of the realization account is this step. We did this step. I don't know whether there's any questions on this
On
machinery
the chart,
realization.
I see Shabangu is back saying, how did you calculate the profit on sale?
Here, what you can do here, you can use the difference. Because remember, if you add the credit side, 24,300 plus 19,500, they will give you 43,800. And the debit side was only 41,900. Maybe the difference will give you profit on sale of machinery. Here it was the difference that give you profit on sale of machinery. I don't know whether the student was answered or not.
Maybe I can go further to say whether it's profit on sale or loss on sale is determined by just balancing the T account, like you said, sir. It's balancing the T account. That's where you get whether it's a profit or a loss. And balancing the T account, I think that's what you taught them from study unit. Is it study unit 3 or 4? I can't remember. Where they check the bigger side between the two sides of the T account, and the smaller side is the one that is the balancing figure. So let's say maybe the student will come back and tell us if he is happy. This one is a tough one, Brother Joseph. They say I got my 10 marks on this question. I don't know why I graded bank instead of Emmy Limited. Or actually, I think this one it was just
it was error because which one? Oh, this one 88, the difference, because remember they bought on credit.
Yeah, I think the student is just saying.
Oh, yeah.
He was confused. Why did he use bank instead of Emmy Limited? I'm not sure. Yeah, I think she's saying that, or he's saying that. And Shabangu is saying it's sorted. Thank you. So you can proceed. I think if there are no other questions, you can proceed to another question.
Oh, let's move to another question, which maybe maybe that one will be capital account, which is one of the easiest mark.
Sorry, Baba. Maybe let's just explain how we got to that accumulated depreciation of 24,300. That's the question here saying, how did you get accumulated depreciation? So maybe you can just elaborate on that, the 24,300.
Oh, that one student must remember. Accumulated depreciation is all the depreciation expenses added together. Then we called them accumulated depreciation. If we go back to the scenario, here the scenarios say additional information B, small b, depreciation is written off at 20% per annum using the diminishing balance method. And I'm saying if the question saying using because there are three methods, diminishing balance method, straight line method, or price method, and the last one, units production method. Here in this question, the question required students to use diminishing balance method. And I said the diminishing balance method, you take your cost price, you less residual value. If residual value is given, then you arrive at your depreciable amount. From depreciable amount, you less your accumulated depreciation if the assets was previously depreciated. Then you multiply by the depreciation rate, which here given at 20% per annum, and you multiply by by number of months if the assets was purchased or sold during the year times 12. If I go back here, because it was out of these two machinery, one of the machinery, because if you say 88,300 divided by 2, it will give you, let me calculate, 83,800 divided by 2, it will give you 41,900. And 45,400 divided by 2, it will give you 22,700, which is our accumulated depreciation of one of the machinery. Then here we said on 31st January 20.4, management decided to increase production capacity and purchase a deck machine on credit from EMI Limited for 88,800. One of the Zebra machine was traded in, reducing the amount owing to EMI Limited to 69,300. Here we said, remember the financial period. Here the balance is as at 1 August 20 point, it was 20.3. If you calculate, you're saying 41,900 minus 22,700. Then you multiply by 20%. I don't know how much is the figure. Let me subtract. 41,900 minus 22,700 is 19,200 times 20%. It will give you 3,840 times. The month is 5 times 12. September, October, November, December, January. 5 months times 5 divided by 12. It will give you 1,600. Then you add the accumulated depreciation at the beginning, which was 22,700. Then it will give you 24,300. I don't know whether the question was answered properly or not.
I think you answered it for me perfectly, because you are just saying the total 24,300, which is the total depreciation for the sold or traded in machine, was comprises of the 22,700 plus the 1.6, which is depreciation for that part of the year the machine was being used. I think you explained it clearly, Baba. We'll see if they will come back. The student will.
Let me stop sharing.
I think, yeah, you can proceed.
Let's stop sharing and share the next question from our assessment. Let me share the next question from our assessment. The next one was the capital general ledger account. If I remember, it was one of the easiest question in our assessment. Let me share the screen for this one. Let me close here. Let me increase. Yeah, this was a 12-mark question from our assessment. And here we said use the following transaction during December 2020, 20.2 to reflect the transaction in the capital account of Intercity Dentist, not a registered vet vendor, for the month ended 31st December 20.2. Please indicate the contra ledger account correct. Here you are given the month is December. 1st of December, Mr. K. Musipi, the owner of Intercity Dentist, made an EFT deposit into the bank account of the business as opening capital, 250,000. December 13, as an additional capital contribution, Mr. Musipi transferred a dentist chair he inherited to the business. December 20, Made an EFT to Mr. K Musipi for private use, 8,000. Then here the total comprehensive income and total comprehensive loss for the year ended 31st December 20.2 is 25,345. And please note the financial year end is 31st December 20.2. Here doesn't use the above information to compile the capital account, which is the T account of Intercity Dentist for the period ending 31st December 20.2. Let me stop sharing and go to maybe study unit. Maybe if I can go to study unit and show you something. Let me check here. I don't remember whether it was study unit 3. Let's go to study unit 3. Under this compulsory reading here. Under study unit 3. Because remember, assessment 3 was study unit 1 to study unit 16. I want to show you something we discussed. It was our first or second class. If I remember, it was our first class. We discussed this. This one. Remember, capital. We said capital increases where? This is the basic. We said capital increases on which side? On the credit side, and capital reduces on the debit side. And here, this is statement of changes in equity. Remember, we can use the same information from information given in our assessment, and we required you to do statement of changes in equity. But in our assessment 3, the required was you to do capital general ledger account, which is the T account. And we said capital increases on the credit side and reduces on the debit side. If you check here, capital opening balance, that means this amount will come on the credit side. If there is any additional contribution during the year, it will increase our opening balance. That means this amount also, this one will go on the credit side because it will increase our opening balance, which is on the credit side. And we said, if there is any from this balance always comes from the statement of profit and loss and other comprehensive income, which was previously called income statement. This amount, if the business makes income, it will come here, it will increase our T account of capital account. If there is a drawings, here the owner withdraw. Maybe the owner withdraw something from the business, either cash, or maybe the owner withdraw furniture from the business, it will reduce our capital. That means it will go to the credit side of the capital T account. Here, remember capital, if maybe I'll explain capital. Capital is anything. It could be amount or assets contributed into the business by the owner. And also there is drawings. Remember, drawings is when the owner takes things from the business for its own use. That will be the drawings. And we remember he said capital increases on the credit side. That means opening balance will come here. Additional contribution by the owner. Anything contributed by the owner. It either the owner contributed asset, it will come here, or the owner contributed money, it will come here on the credit side. And if the business makes an income or a profit, it will come here also on the credit side because it will increase capital of the capital. And if there is a loss, total comprehensive loss, it will come here on the credit side. If the owner takes things from the business for its own use, it will come here on the credit side. It will reduce our capital. This is one of the this is one of the questions we discussed in our class. Let me stop sharing and go to the question. Not on this one. We are here on this one. I think this is the same as that one. Here you are required to do T account of capital, which I said capital increases where capital increases on the capital increases on the some of them they are saying they can't see. Capital increases here on the credit side and reduces on the debit. And the first one, they are saying, Mr. The owner made an EFC deposit into the bank of the business's opening balance. Here, the 250 will. They're saying, Maraisan, can't you see the screen?
Yes, they are right. The sharing is not in order. Can you try
Oh,
to
sorry.
share?
Let me share again. Now you can see.
Yes, sir. It's perfect. It's okay now.
Yeah, sorry for that. I'm saying, if you remember the statement of changes in equity. Here you are required to do capital, and I said capital increases on the credit and reduces on the debit. And the first transaction saying Mr. K Musibi, the owner, made an EFT deposit into the bank account of the business as an opening balance. An opening balance will come here because the owner contributed cash into the business. That's why we said. That's why if you remember the journal entry here, we debited bank with the 250,000 on the first transaction and we credited capital. That's why we put bank as a contra account. The other account involved in the transaction is the bank. That's why here we put bank 250,000. Is the other account involved in the transaction. Remember on this transaction, we debited bank with 250,000 and we credited capital with 250,000 because this is our capital account. We can't put capital here. That's why we put the other account involved in the transaction, which is a bank account, 250. And the second transaction, an additional capital contribution, Mr. Musipi transferred a dentist chair he inherited to the business. Here, the owner transferred a dentist chair. Here, the owner transferred a furniture into the business, which was on the credit side. Because remember, I said capital is any amount or asset contributed into the business by the owner. Here, the owner contributed what? Here, the owner contributed an asset, which is a furniture. Then it will increase our capital, which is increases on the credit side and reduces on the debit side. That's why you see 180,000 on the credit side. Here, Mr. made an EFT to Mr. K Musibi for private use. Here, there is EFT for private use, which was drawings, because I said drawings is when the owner takes things from the business for its own use. This is part of the drawings. That's why it will be here 8,000 on the credit side drawings. Yes, they're saying the total comprehensive loss for the year ended 31st December is 25,345. And this is the loss. And we close off the loss into our profit or loss account. That's why we see a profit or loss account 25,345. If it was profit, it will be here on the credit side of the capital general ledger account. which is our T account. Let me take the questions on this one. If there is any question, I see there is a question from Ntswaki. Ntswaki, you can come in. Ntswaki?
Yes, sir. Can you hear me?
Yes, I hear you.
Thank you. I just want to ask, I think it's a stupid question, but I really need to understand.
There's no
Because
stupid
my
questions. Don't worry.
understanding was that since you said we can't say on the credit side is a capital, but I was thinking maybe it could be opening balance, since it was also said that he deposited the amount as an opening capital.
Oh, you mean, let me go to the... Can you see? You mean this one, the 250,000?
Yes. Because I don't understand this thing of bank. Maybe if you can explain it.
Let me check. Here, the owner of Intercity Dentist made an EFT deposit into the bank account of the business as an opening capital. Here, the owner contributed 250 as an opening capital. Or you
Can I
want to
take it?
say, maybe, yeah, you can take it, Mr. Maraisan, while I'm still trying to...
Yeah, no. Let me just. It would. Who is the student? I can't remember. Is it
Ntswaki.
Liz? Ntswaki. Oh, I was in Ntswaki. It would be an opening balance if the business has been trading in the previous period. So now it's a new business. We are starting now.
No, I get it. Thank you.
You get it? Okay.
It makes sense now.
All right. Thank you.
Thank you.
Oh, thank you, Mr. Maraisan. There is another question from Bianca. Let's allow mic for Bianca. Bianca, you can come in?
Can you hear me?
Yes, properly.
Okay,
I
so
hear you.
I'm concerned with the dentist chair. I thought that could be seen as equipment because it's not a furniture piece. I understood it as a dentist chair is a specialized equipment that you would use for the dentist, and not just a normal. You would have to say, as additional capital contribution for Mosapi transferred a chair, then I would have seen it as furniture, but it says a dentist chair specifically, and I thought that could be used as equipment.
Oh, you said that was equipment.
Yes.
Can I?
Yeah, you
answer
can
it?
take. Yes, Mr. Maraisan.
Furniture and equipment are always classified together. Maybe we should have just said furniture and equipment, because you would find that they are classified in one group, furniture and equipment.
I understand.
So you are right, yes, it's equipment, but furniture and equipment are classified in one. So basically, I mean, maybe you would say we have left to say furniture and equipment on the narration.
Yes, like furniture
Which,
forward slash equipment, because I lost the mark on that.
yes, no. I
Can
mean,
you send us your can you send your screenshot of of this question from you to FAC 1502 at unisa.ac.za so that we can see what we can do?
I mean, again, Baba Joseph, I'm not sure if on the
On the
options,
options, yeah, there was
was there
equipment.
any equipment?
No, it was
It was
equipment.
furniture. I
Yeah,
think,
the
yeah, we took
people
it that
furniture only.
Oh, it
furniture
was
and
only furniture on
equipment.
the options.
No, it was furniture and equipment, and I chose equipment, thinking
All
that it is the dentist chair that he would be
Yes,
like revenue of.
I think you are right. Um, um, All right. I think like my colleague is saying, just send the screenshot so that you can see how we resolved that. Dentist chair. I'm not sure, but we will discuss it. Just send your message to the email box.
Thank you.
Thank you very much.
Thank you. Let me. Is there any questions? Because I don't see any hands. Here I said the elective for assessment 3 will have the same question as assessment 3. The elective for assessment 3, which is assessment 6, it will be the elective assessment will be 80 marks, but it will address the same principles as assessment 3, but the transaction will be different, but it will be the same principles. Because remember, in our assessment, if you first you must understand, you must know the principle, understand the principle. You must know how to apply the principle, and also apply the principle in different circumstances, because the principle will be the same, but the transaction will be different, but addressing the same principle. It will be principles. Accounting is principle.
I think yes, he's saying thank you. Can you explain more on the contra account on the capital account, ledger account, the contra profit and loss? Is there anything you can say on that?
Please let me go there. Sorry, not this one. I opened many things now. Oh, this one. So you mean this profit or loss account?
Yes, sir.
Let's see. I want to go back and check here upwards, because here they are saying the total comprehensive loss. The total comprehensive loss for the year ended 31st December 2022 is 25,345. This amount is from where? This amount is from statement of profit or loss and other comprehensive income. Yeah, let's think about this one.
Let me not throw you into the bus.
Let me maybe this one. You still must remember December 22. This one, December 20. We said made an EFT payment to K Musipe for private use. Maybe the student maybe understand we debited, if we go to the journal entries, we debited drawings with 8,000 and we credited bank with 8,000, but we closed off drawings account to the capital account. Maybe this one, Mr. Moresan, you want to come in?
I mean, yeah, I thought maybe I can say something. You will correct me. Remember on study, is it study unit 7?
7, closing of procedures.
Closing of procedures, yes. Where they close off all accounts to the T accounts, the trading account, profit and loss account. And when you close off the profit and loss account, the T account of profit and loss account, you close it off to the capital account. I think maybe you can refer them back to that study unit 7, just to check the movement of money from the profit and loss account, the T account. You will see that you'll trace that amount from the profit and loss account to the general ledger account capital.
The closing of the
Closing of procedures.
Yes, that one. Like as I said, drawings was closed off to the capital account. But if you analyze this transaction December 20, you will say debit bank, debit drawings with 8,000 and credit bank with 8,000. But you closed off drawings to the capital account. Is the same principles applied on the profit or loss account? Because remember, we closed off profit or loss to the capital accounts. I think it's still the same principle applies here on this one because we closed off profit or loss to the capital accounts. Is a student answered?
I think so, because one of them is saying, I think what is confusing is that if you had to add the opening balance or the capital balance, the bank account, the 250 and 180, and you deduct, you would, in theory, have gotten the profit and loss account. I mean, but the real procedure is, I'm answering the student. I think the real procedure is that actual amount is not the difference. Is not the
That one is
difference on
this
the
20.
on the T account. It's actually coming from the profit and loss account. But in
So
this case, I mean, if you were to do that, take the bigger side and subtract 8,000, then you would get to 25,000. But the actual transaction is that movement is coming from the profit and loss at T account in the books. I'm not sure if the student will understand that. Thank you, Baba.
thank you. Let me check if there's any questions before we move. There's a question from, let me allow the hands. There's a question from, let me allow Samkelo. Let allow Mike Samkelo. You can come in. Samkelo. Samkelwe. Yes, sorry. Samkelo. Nontokozo. Nontokozo. Let's move to the next one.
I think she must unmute her mic, but go to the next one is fine. We will go back to her.
There is no other hand. Yes, she's not. She's in. Good evening. Nontokozo. Unmute. Nontokozo. Let's see on the chat. There is nothing from Nontokozo.
Nothing at the moment.
Nontokozo, you can speak. I don't know what's the problem from Nontokozo. Or Nontokozo, you can, if you can't speak, you can type on the chat. Because we can't hear you. Let's check on the chat. Maybe I'm failing to unmute. I don't know because we allowed you. Your mic is okay. We allow your mic. Hello? Let's disable and allow you again. Let me allow you again. Please type on the chat. Yeah, let's move to the next. While waiting for Ntokozo, maybe she will come later on. Is there any question on the capital general ledger account? If there is no question, without question, we can move to the next one. Let me stop sharing and share the next one, which was one of the easiest statement of profit or loss. And we ask you to calculate gross profit or gross loss. It will depend. Let me share the question. Let me share this one. Yeah, it's this one. I think it's this one. Let me share this one. Let's increase so that you can see. Yeah, this is one of the question from the assessment. It was 16 marks and required you to calculate or compile the statement of profit or loss and other comprehensive income for the year ended 30 June 2024 using the above information. And if you checked the above information, inventory 1 July 2023, which is the opening balance, is given, your sales, your purchases returns, your coverage on purchases, your coverage on sale, your settlement discount granted, and under additional information number A, we set inventory on hand on 30 June 2024, which is the end of the current financial period, is 20,000, which means this is the closing inventory. And stationery on hand on 30 June 2024 is 325 rand. Remember, stationery is an expense and stationery on hand is a current asset. You must remember the difference. There will be stationery and stationery on hand. Stationery used during the year will form part of stationery expenses under other expenses in the statement of profit or loss and other comprehensive income. But stationery left over, which is stationery on hand, will form part of your current asset in the statement of financial position, which was previously called balance sheet. And additional information C says interest of 650 were just on a long outstanding account with C2 suppliers. This was the given information, and the required says compile statement of profit and loss and other comprehensive income using the above information. I think was one of the easiest 16 marks. According to me, it was one of the easy 16 marks given in the assessment. Because if we go to the solution itself, this is the solution. Revenue, it was 267. And remember, there was sales of 270. And if you subtract the settlement discount, it will give you how much? Let's check. I'm missing something now. If you less the settlement discount, it will give you 267. I want to check this question properly.
I think 270 minus 3,000. Is it not right?
It will give them 267.
Yeah.
Yes,
I think so.
Then if they go again and this one is given the inventory at the beginning, the 60,000 is given here. And the net purchases, remember the net purchases, it will be how much? It will be your purchases and you less what? You less your purchases returns. And you less what? And you less the settlement if the settlement is given. Then you less the settlement and you arrive at your net purchases. Here the net purchases was 75,000 minus 1,500, which is 73,500. And the carriage on purchases was shown separately as 2,000. And the closing inventory was given as how much? 20,000. And you arrive at your gross profit of 151,500. I think this was one of the easiest question in our assessment. They can see, and maybe this is the solution. This is the given information. Remember, this settlement discount granted is settlement discount offered to our debtors in order to encourage debtors to pay their debt as early as possible. That's why they reduced our sales. Remember, those guys, we sold to them on credit, and for them to encourage them to pay, to encourage debtors to pay us as early as possible, we offered them settlement discount granted. And that's why the settlement discount granted reduces our sales. And if there is a settlement discount received here, it will form part of net purchases. Because remember, net purchases, it will be purchases, you less purchases returns, and you less settlement discount received. But here, there is no settlement discount received. That's why our net purchases, it is 75,000 minus 1,500. And it was 73,500. And there was also carriage on purchases for 2,000. And if you less, you say 60 plus 73,500 plus 2,000 minus 20,000, they will give you cost of sales. And revenue is greater than cost of sales, it will be our gross profit. I think this is one of the easiest mark in our assessment. It was 16 marks in assessment 3, this question. It was the easiest 16 marks. Let me stop here and take questions if there is any questions. Let allow the mic from TM. Let's wait. Sepiso? Sepiso?
Hi.
Hi, how are you?
I'm good, thank you.
I'm good.
Okay, so my question had both sales returns and settlement discount received, as well as carriage on sales. So when we work out the revenue amount, would it be then the sales less the sales returns? Do the carriage on sales come in anywhere? Oh, you said those go into purchases, right?
Carriage on what? Carriage on sales.
Carriage on sales, yes.
Remember, carriage on sales is amount paid to transport maybe goods from the business to the customer. That one will not form part of our sales. It will form part of our other expenses in the statement of profit or loss and other comprehensive income.
Okay. Can I see that solution again? So our revenue amount will then be the sales amount less the sales returns.
Revenue amount The 267, there was no sales returns. It was sales minus settlement discount granted.
Discount granted.
Because
Cool. But
remember,
my
discount granted is the discount we granted our debtors or our customers to pay us as early as possible.
I understand that. But the question that I had on my assessment had both sales and sales returns.
Yeah, the question are different. If they sales
But
return, you
you're
say
saying
sales
sales-
minus sales returns. That's why in our review, we can't discuss all the question, but the principles will be the same. The revenue, it will be your sales, you less your sales returns if it is given in the question, and you less your settlement discount granted. That's how you calculated your revenue.
Okay. So, and then with settlement discount received,
That one will form part of net purchases. Net purchases, it will be your purchases, you less your purchases returns, and you less your settlement discount received. Remember, the settlement discount received will reduce the amount of purchases, because this is the settlement discount offered by creditors to encourage the business to pay them as early as possible. That's why it
okay.
reduces the purchases amount.
Okay. Thank you.
Yeah, I think, are you okay?
I'm good. Thank you.
Oh, thank you very much. Let's move to the next one. The next one is Ntswaki.
Thank you, sir. Thank you.
Thank you.
I just want to understand, you said stationery on hand, where does it fall?
Remember, stationery is an expense, but stationery not used during the current financial period. That means stationery left over, stationery on hand, will form part of your current assets under statement of financial position.
Oh, okay.
Yeah, remember, this is stationery. Let me go. This is stationery on hand. It will form part of your current assets in the statement of financial. This was just to add additional information that was not relevant. But if you understand the principles, you will see stationery is an expense, but stationery left over during the year, that means stationery on hand will form part of your current assets under statement of financial position.
Thank you.
This was just an additional information. Let's move to the next one. Let me allow Mike. The next one is Murendeni. Can you please come in?
Good evening, sir.
Good evening. How are you?
I'm good. Hey, I have a question here when it comes to sales.
Yes.
So if they are given as sales return and the settlement the council receive, I need to subtract both of them or what? I'm confused here.
Not the settlement discount received, the settlement discount granted. You say sales, less sales returns, less settlement discount granted. You subtract both sales return and settlement discount granted from sales.
Oh, okay. Thank you.
The settlement discount received, you subtract when you calculate purchases, because when you calculate net purchases, you will say purchases, you less your purchases returns, then you less your settlement discount received.
Okay. Thank you.
Thank you. Let's move to the next one. The next one is Closen. Closen. Yeah, I don't know whether I am. Yeah.
You pronounce correctly. I know it's fine.
Can you come in? Closen. Hello? Let me check. Kilebogile. Why? Kilebogile? Kilebogile?
Yes. Hello.
Yes, how are you?
I'm fine. How are you?
I'm okay.
Yes. No. The thing is, you.
You are covered.
No. The thing is, you were too quick. I didn't get some of the I had revenue. Revenue is sales minus sales returns. Cost of sales. I didn't understand how you got the cost of sales, and the others.
Oh.
I only had the net purchases and the revenue.
Yeah, revenue, agree. Remember, revenue is your sales, you less your sales returns and you less your settlement discount granted. That's how you calculate your revenue. But when you calculate your net purchases, it will be purchases less your purchases returns and you less your settlement discount received. Then if you come here to calculate sales, you will say your opening inventory of 60,000 plus your net purchases plus your coverage on purchases. And you less your closing inventory. Then you'll arrive at 115,500.
Opening inventory plus
Net purchases, which is your purchases returns and your settlement discount receipt. It will depend on the given information. But net purchases, it will be your purchases returns, and you'll take your purchases, you less your purchases returns, you less your settlement discount receipt. Then you arrived at your net purchases.
or inventory plus net purchases. That's it.
And plus coverage on purchases of the 2,000.
Oh, coverage on, okay.
Remember, coverage on purchases is amount paid by the business to transport goods from the supplier into the business. This is coverage on purchases. And you less your closing inventory.
Mm-hmm.
Then you
So the next
arrive at 115,500, which is your cost of sales.
Okay. Can I also come in there? The two most important words or transactions or line items is revenue minus cost of sales. Then it gives you gross profit. Can you see? 267,000 minus 115,500. Then you will come to 151,500. Can you see that?
Can you please repeat gross profit?
Yeah, I'm saying the most important words here is the revenue. How do you calculate revenue? And how do you calculate cost of sales? So if you have those two correct, revenue minus cost of sales, then the last figure is gross profit that you get out of the two.
Oh, all right.
Yeah, because you will say 267,000 minus 115,500. Then you'll come to 151,500. Do you see that?
Yes.
Then the question is, how do you get 115,500? Do you see that? So
115,500, yeah.
Yes, then that is where your question is now. How do I get 115,500?
Yeah.
So the formula is, or the calculation is, opening inventory plus net purchases plus carriage on purchases less closing inventory. If you can calculate that calculation, then you get cost of sales, which is 115,500.
Oh, right.
Then we said these net purchases, which we don't know where it comes from, it is the effect of purchases minus purchases returns minus settlement discount received if it was there. The three items.
Yes.
then you would have your net purchases. So therefore, that block, the whole block, is revenue minus cost of sales gives you gross profit. So what goes inside the cost of sales is what I've just explained.
All right, thank you.
Thank you.
Oh, thank you, Mr. Marais. And sometimes here it will be carriage on purchases, or it will be insurance on purchases, or it will be import duty on purchases, or it will be exercise duty on purchases. Others maybe in assessment, yeah, the question maybe it was import duty, others it was insurance on purchases. Yeah. Yeah. And remember, don't confuse this one, the carriage on sales. Carriage on sales will form part of other expenses in the statement of profit or loss and other comprehensive income. It will not form part of your revenue, this carriage on sales. And it will not form part of the calculation of gross profit. Let's check whether there is any questions or comment. There's okay, maybe yeah. Let me check. Is the is the old hand or is this the new hand?
No, it's the old hand. Sorry.
Okay. Is there any questions? Ntswaki, let me Ntswaki.
Yes, I see some of my fellow students here. I'm not sure, but let me ask this question. So can you tell us, when do we use sales and when do we use revenue? I'm asking this because on some of the lessons, when you ask a question, the tutors or the lecturers, actually the tutors, when I remember, they will say just the terminology.
Can I take it, Baba?
Yes.
Mr. Mhongoni. This is revenue is the broader term. It's a broad term that is used to cover all the income types, being whether a business is a trading business where they will be selling, buying and selling, so it will be sales, or it can be from a service industry, it will be services rendered. So you will see for those of you who will move to second level, that's where they will show you all the classifications of revenue. Revenue, I can say, if I'm right, Mr. Mohokoni, it's a broader term encompassing all the income types from different businesses. Am I right, Baba?
Yeah, you're okay. Yeah, you're right.
Do you understand, Nzagi?
I can understand, but not really.
But remember, on the assessment, it was options, and if I remember it, the option was only revenue. I don't remember the other option. The correct option was revenue. Like, we can't put revenue and sales.
There were sales there.
There were sales.
Yes.
I don't. But remember the calculation of revenue, how to calculate revenue. You'll say your sales, you less your sales returns, and you less your settlement discount granted. Maybe, I don't know whether I can see which study unit is this one. Let's maybe check under study. Maybe I'll share something from study unit. Let maybe check study unit. Let me stop sharing and go to study unit 7. Let me stop sharing and check on study unit 7. Let me stop sharing and share study unit 7. Let me try to share study unit 7. I want to check under study unit 7. Let's see under study unit 7. I want to check something quickly under study unit 7. This is study unit 7. This is the compulsory reading. Let me come here under compulsory. Do you all see my screen? Maraisan, are you?
Yes.
Yeah, let me. What this one? This one is study unit is exercise 7.1. I don't know whether we have. This one is the calculation of cost of sales. This one. I don't know. Let me check. This is the calculation of profit or loss account. Oh, let's see. This is one of the exercises, like this statement of profit and loss at a comprehensive revenue, cost of sales. Yeah, what you must do, just send us the screenshot so that we can see. Because if you check here, we said revenue, notes 2. Let me go to notes 2 and see. Where is notes 2? I want to check notes 2. Maybe it's up there. I don't know where is notes 2. I need to check notes 2. But if you see here, and here we set revenue. But what you must do, send us the screenshot so that we can see. Are you still there, Ntswaki?
Yes, I'm still here, sir.
Yeah, I'm saying, please send us the screenshot of your question to FAC 1502.
Okay, sir. But I'm still concerned now because now the other says explaining that this is a broader term. But then my concern is that on the other previous, but I'll check and then send on the e-tutor. When you ask a certain term, they will say it's just terminology. So my confusion is that now, because sometimes when you are writing this assessment, you are running out of time. Yeah, like you need to know your story. And if you don't know your story, like this, just a terminology, you just write, choose the one that you just find.
It's me who said, sorry to interject, who said it's a broader term.
Yes, yes.
It encompasses all the incomes from different companies which are doing different things. I mean, if you check, Bra Joseph, we can open study unit 15, page, check the study unit exercise 15.2. It's on page 10.
Let me go to study unit 15 quickly. Is under compulsory reading or under e-tutor?
The study unit itself.
Oh, study unit.
Yeah, accounting reporting.
Yes.
Check page 10.
It's 10.
Page 10. You see exercise 15.2.
Sorry, let me go fast. Yes.
You see that exercise, it talks of service fees because the company is a services company.
So they couldn't have been, maybe they put that sales revenue service rendered.
Remember, a service company won't have the cost of sales and everything because they don't buy and sell. They just sell the service. So it will only be.
Let's stop sharing this one and go to study unit 3. Explain properly. Let me go to study unit 3. This one will be clear to Nzwaki. Let me go to study unit 3 because I remember when there was the first or second class, maybe it was our first class. Study unit 3 explain.
At the same time, if you go there, I'm just saying, Zwaki, just check exercise 15.2 on your study unit. It's on page 10 of the study unit 15. And when you go to the solution of that, it talks of revenue, not services rendered, because revenue encompasses services rendered, sales, all those are the components of revenue.
This is clear, Maraisan here. Revenue is an income and through an entity normal activities, daily operating activities. For example, fees and sales. You see interest income, rental income, commission income.
So it explains it clearly.
What I can say on this one, let me think about this one. I think Mr. Marasan explained it well when coming to revenue.
Nzwaki, are you covered?
Yes, I'm covered on this one, sir, but I'm still concerned about the questions that I've asked previously on this on a part of terminology. Because this one was I should have done my homework and understood it, but some of the things when you ask them in a class and then they say it's just terminology, it gets confusing when it comes to this, but now I understand.
Okay, we are sorry for that. There is confusion sometimes. I mean, we all are not perfect, I can say. I'm still learning. I mean, all right. Now, if you are happy with this one, I think you can proceed because the time is on our side. It's not on our side.
Oh, let me share the other one. The other question I will share. That one it will be much quicker. Before we go to the last big question, that one, let me share this one. I think this one it will be much quicker. Because this was 5 marks. This was interest on overdue accounts. I think this is one of the easiest in assessment. Let me increase this so that I think this was out of 5 marks, interest on overdue accounts. Here we said Ronnie Dealers is not a registered vet vendor and applies the principles of perpetual inventory system. We said on 31st March 2024, Ronnie Dealers received a statement from Wholesalers, a creditor. Remember, a creditor is a business or suppliers, the business purchased from them on credit, and we call them creditors. The bookkeeper noticed that Ronnie Dealers, which is our name of our entity, OMM Wholesalers, which is our credit, our liability, 2,400. And that interest of 12% was charged due to late payment of the account. Here, they charge at interest because of late payment. No entry was made in the accounting records of Ronnie Dealers for the interest amount. Here, what will the record journal entry. We want journal entry in the books of Ronnie Dealers from the above information. Here, let me go to the solution. Here, the solution here, the journal entry. We debited interest expense and we credited our liability, wholesalers. And this is the narration written there. Because if you say 2,400 times 12%, it will give you 288. Then you get your full 5 marks without any hassle. Then your 5 marks is in the back. I don't know whether there is any question on the 5 marks of the journal entry for interest expense. This journal entry is also there under study unit 13. If I go to study unit 13, but there was no calculation, it was only the journal entry. Let me stop sharing a little bit and go to study unit. Let's share study unit 13. I want to show them the journal entry. Let me go to study unit 13 quickly. Study unit 13. Let me check under this study unit. Thirteen point 13.3, 13.2. This is the exercise 13.3. I don't know. This is the transaction. According to the monthly statement received from Zulu, interest has been on overdue. No interest been made. Let's see whether there is here. There is journal entry. I'm not sure. How much is the interest? 45 rand. Yeah, this is the one. This is the 5 marks in the assessment. This one is the 5 marks in the assessment. This was the 5 marks in the assessment, this journal entry. That one, general journal, that one. It was the 5 marks in the assessment. Let me go to our question quickly. Yeah, this was the 5 marks in the assessment. Let's move to the question. Let's move to, is there any questions on this? Any question or any comment on this one? Let me check on the chat if there is something on the chat. I joined the class 30 minutes late. Was this question on membership is done or is still going to be done? We'll see if this time allows us. Any question? Let me
move to the last one so that maybe they can ask the question.
Let's stop sharing and move to the last one, because on this one, I think maybe they are clear. Let me share the last one. We only discussed the big questions from the assessment. Maybe this one, it was the big one. It was 28 marks. This one. It was 28 marks. This is the solution. It was general journal entries. It was 28 marks. This was the last one, and it was the big one in our assessment assessment 3. This was one of the big questions. And here you must understand the difference. If you don't understand the difference between VAT input and VAT output, maybe, yeah, but it was not difficult. It's just understand how to calculate VAT if you are given amount excluding VAT. If you if you are given amount include VAT, how to calculate the VAT amount. And you are given the VAT input, which is an asset, and we said asset increases on the debit side and reduces on the credit side. And also there is a VAT output, which is a liability. And we said liability increases where liabilities increases on the credit side and reduces on the debit side. This was VAT input and VAT output. And also on this one, you must remember the types of subsidiary journals. If I remember, there are how many? There are 7. There is cash receipts journal where we recorded cash received by the business, and also there is cash payments journals where we recorded all cash paid by the business, and also there is sales journals where we recorded all trading inventory sold by the business on credit. And the other one was sales returns journal where we recorded all trading inventory that was sold on credit by the business, but now it returned by our debtors. That one, the returns will be recorded under sales returns journals. And there was purchases journal where the business record all trading inventory purchased on credit by the business are recorded under purchases journal. And the other one was purchases returns journal, where the business returned inventory they purchased on credit from the suppliers. Those inventory returned by the business to the suppliers will be recorded under purchases returns journal. And the last one was general journal, where we said all transactions that cannot be recorded in the above journal entry I spoke about will be recorded in the general journals. For example, credit losses, interest on debtors accounts, year-end adjustments, for example. Yeah. And here we were given the VAT input. Remember, VAT input, it is an asset because it is claimed back from SARS by the VAT vendors only if you are registered for VAT. Is the VAT paid on goods delivered or service rendered by the business? And there is VAT output, which is a liability. Is VAT collected by the business on behalf of SARS? And if VAT output is more than VAT input, the difference will be payable to SARS, which is a liability, which is our current liability. And if VAT input is greater than, sorry, I said if VAT input is greater, if VAT output is more than VAT input, the difference will be payable to SARS, which is our liability. And if VAT input is greater than VAT output, the difference is refundable to the entity by SARS, which is VAT refundable. Here they are saying the business started, Florence Mohale started a new business after qualifying as a biomedical engineer. The business named Floral Medical Equipment is a registered VAT vendor. If a person is a registered vendor, that means the person can claim VAT or can pay VAT to SARS. You can claim the VAT input from SARS and pay the VAT output. You can claim the VAT input from SARS and pay the VAT output to SARS. And they are saying here, there is on 31st July, you're given the VAT input, which is a liability, which is an asset. An asset, we open as asset with the debit balance because we set asset increases on the debit and reduces on the credit. And there is also a VAT output, which is a liability. And we always open liability with the credit side because liabilities increases on the credit and reduces on the debit. Here they are saying Florence does have limited accounting knowledge after taking the subject in high school up to grade 12. She came to you for assistance relating to the recording of the following transaction for July 2024 and do not adhere to the requirements of the cash journals. Transaction date 5 July. Purchase stationery on account from South African stationers. Here you must remember, where do you record stationery purchased on credit? Because remember, only under purchases journal, the business record only trading inventory. And only trading inventory purchased on credit will be recorded under purchases account. Here the business purchased stationery on account on credit from SAA stationers. For 500, excluding VAT. Here remember, amount excluding VAT is 100% and VAT is 15%. 100 plus 15, it will give you 115, which is amount including VAT. Then here to calculate VAT, you'll say, because they're saying VAT exclusive, you'll say 15 divided by 100, because we said amount excluding VAT is 100. You say 15% of VAT divided by 100. If you say 500 times 15 divided by 100, they will give you 75 rand. Then you must ask yourself, is this the VAT input or the VAT output? Because we purchased, because we said VAT input is the VAT on the purchases of goods or rendering of services and will be claimed back from SARS by the VAT vendors. This one will be the VAT input. Then if we go to solution, you see we debited stationery 500, we debited VAT input because we bought on credit on account. We credited our liability, which is our trade and other payables, by 575. If you say 500 times 15 divided by 100, it will give you VAT input of 75. If you add the 500 plus 75, they will give you 575, which is trade and other payables. Then the narration was stationery purchased on credit, but that one was given in our assessment. This was transaction dated 5. And the last word transaction, it was 23. Because remember, here under the required, number is a purchase transaction of stationery on 5 July. We addressed that one. Now we are saying we address purchase transaction of the equipment on 23 July. Here, entered into a finance agreement with ABC Bank for 80,500 to purchase equipment. That's why it's purchase transaction of equipment. The loan bears interest at 10% per annum and is repayable in equal monthly installments. The bank paid for the equipment on the same day, and the supplier delivered it to the business premises later in the afternoon, same day. Everything happened on the same day. Here we say purchase transaction of equipment. Here you must understand, when the business purchased, it still fall under VAT input, because we said VAT input is VAT on the purchases of goods or rendering of services by the business. Then if you go, you'll say 80,500 Let's go to 80,500 times. First you must ask yourself, is this amount including VAT or excluding VAT? This 80,500. Because the question here is not clear. But on the first information we said this is a registered VAT vendor. That means, and the applicable VAT rate is 15%. That means this 80,500 include VAT. And I said, when you calculate VAT, it will be 15 divided by 115 because 100, it will be amount excluding VAT. 15 is the VAT and 115 is the amount including VAT. That's why here we said 80,500 times 15 divided by 115. Then your answer will be the VAT input of 10,500. If you see here, the VAT input of 10,500 and the loan was 80,500 and the equipment was 70,000. And if you say the VAT input, if you open the VAT input with the debit side, you put 7,200 on the debit side of the VAT input. And also here, the VAT input was debited, you put 75,000, you add 75,000 on that amount. Also, you add the 10,500 on that amount. Then it will give you 17,775, the total VAT input. And this one was given because nothing happened on the VAT output side. It will be this 9,000. And this is the end of the review of assessment 3. It was only the review on the big questions where students struggled with the big question. This was 28 marks on assessment 3. Let me open the floor for the questions. Let me open the floor. I don't see any questions. There's a question from, let me open the mic for Mbali. Yes, Mbali, you can come in.
Hello, sir. I hope you can hear me. I've got flu.
Yes, we hear you properly. You can go.
I got lost there on the equipment. I'm very much lost when it comes to VAT input and VAT output. I don't know when to use the 115 or the 100 or the 15 itself. So can you please just go back there?
What is that question?
The last question that you just did.
Yes, I want to go back. I don't know what happened. Let me stop sharing and share again. Let me share again. Yeah, this one. You mean this one? You can see my screen now?
Yes, I can see your screen, sir.
You mean here?
On the equipment, yes.
The question here on the equipment was not clear, but it was clear from the beginning because we said the business named Floral Medical Equipment is a registered VAT vendor.
Yes.
That means VAT of 15% is applicable. Only will tell you if the VAT is exclusive or not. If the VAT is exclusive, on the question will tell you, like the first one, 500 VAT exclusive or VAT excluded. But remember amount excluding VAT is how much? Is 100%. And VAT is 15%. To calculate the amount excluding VAT, you'll say 15 divided by 100. And if you add 100 plus 15, they will give you amount including VAT. If the amount including VAT is given and you want to calculate the VAT amount, you'll say 15 divided by 115. Then you will arrive at your VAT amount. But here, only will tell you in the question, if we said the business is a registered VAT vendor, will tell you if the amount excluding VAT will give you like this one will tell you whether the amount is excluding VAT. But on the other amount will not we will not tell you because the business is a VAT registered vendor. You must know that the amount is including VAT. We'll only tell you to say that this amount is excluding VAT.
Okay, sir.
Well, thank you.
All right, thank you.
I don't know whether they can, if there's any question, maybe they can type on the chat.
I'm busy there. There is no one at the moment. I've responded to a few.
Is there any questions? Those ones who are asking about the membership fees, remember the membership fees increases on the credit side and reduces on the debit side. Here you must remember to get the membership fees correct, you must remember the adjustments. We did the adjustment. I don't know whether it was early during the year when we do last on assessment. It was assessment. It was study unit 6. As study unit 6. It was assessment 2. I remember it was assessment 2, yeah. That one you must know what is prepaid expense, prepaid income. You must know the adjustment. Then you are not going to struggle with the membership fees account.
I've already mentioned that I think there was one class on that particular membership fees. I can't remember the date, and I've referred them to check the announcements, the class recordings.
Because
or to check the YouTube channel. I mean, I think the e-tutors explained it clearly there. They can get the information, more information on that. What I see here is there was one student who said, "Can you explain why the interest of 650?" I don't know. Did you talk of interest of 650 somewhere?
Where is there's a question on the interest of 650.
Is there?
I remember the interest was 288 on that one. It was 2,400 times 12%, if I remember well. But
This one I didn't know.
It was 288.
But I asked the student to raise the hand so that we can assist. But I don't see. I did respond to say, raise your hand during the question time.
How do you calculate the amount including VAT? I think this one was, I said 100% and VAT is 15% and amount including VAT is 115. Then to calculate the amount including VAT, this question is how to calculate the amount including VAT, not how to calculate the VAT amount. Can Kelebogile raise the hand? Because if I remember, if you calculate the VAT amount, VAT excluding you calculate VAT amount, but the scenario gave you amount excluding VAT. You will say 15 divided by 100. But if the scenario gave you amount including VAT, you will say 15 divided by 115. Maybe I don't understand the question properly.
Yeah, I think maybe the question is not clear. Like you were saying, Kilewile should raise a
Or
hand.
maybe
So that
Kilewile wants us to calculate the VAT amount, maybe where you are given amount including VAT. Now you want to calculate the VAT amount. Then you will say that one, you will say amount including VAT times 15 divided by 115. Then it will give you the VAT amount. I think maybe Kilewile wants to ask how to calculate the VAT if you are given amount including VAT. That one you will say amount including VAT times 15 divided by 115, then it will give you the VAT amount. Also, if you are given the amount excluding VAT, and you want to calculate VAT amount, you will say 15. You are given amount exclusive VAT and you want to calculate amount including VAT, you'll say 115 divided by 100. Then you will arrive at amount including VAT.
she's saying she's okay. She's fine. There is that question I was asking about the 650. They say it's on the income, the revenue question. I think the 650.
Let me check the revenue question.
Or rather, let's do this. There is a question on the same question. How did we calculate VAT control? How did to calculate VAT control? It's fine.
That one is the difference between let's say between debit side and credit side of the VAT control account. Remember the VAT control, maybe it will, let's say, I don't know how to explain it. It will be a general ledger account. Then on the debit side, it will be the VAT input. Then on the credit side, it will be the VAT output. Then the difference, it will be either VAT payable or VAT refundable to SARS. It will depend which one is the biggest between VAT output. If output VAT is more than the VAT input, maybe for example, the difference will be payable to SARS. It will be VAT payable, which is a current liability. And if VAT input is greater than output VAT, the difference will be VAT refundable to the business by SARS, which will be our current asset. I'm not sure whether the student is answered or not on the VAT control.
I think it's experience. So we hope they will come back and say whether they are sorted or not. Otherwise, maybe you can go to that 650.
Oh, let me go back to 650. 650 is, they are saying is gross profit or statement of profit or loss.
Wait a bit whilst you are still there. Regarding the question that you are doing now on number 23, the loan ABC Bank and debited the amount. Where was that? The loan from ABC Bank. Anna, which question was that?
This one of interest due. Not this one.
Yeah, loan
the last one of PPE. Oh, let's go to the PPE. This one.
Is it? I'm not sure which one is that.
They can see my screen. This one.
No, it's question, the very same question, the last one. The one that you are doing now.
This one. This is the last one.
Yeah, you see that ABC, yes. So yes. I think the question is, am I wrong if I choose loan ABC Bank? I don't know what the journal entry looks like.
Is correct. Loan ABC Bank.
Yeah, I think that is what they wanted to know.
Yeah, it's credited here. Loan ABC Bank.
Okay. All right. No, you can go to the 651. Is that one of revenue? It's a question that revenue minus cost of sales. Yeah, it's question.
I can see my screen on the revenue one.
Yeah, I can see it.
650.
Yeah, 650. Do you see the 650 there?
I don't know, maybe it's the
You don't see any 650.
maybe the different one. I know.
There is on the additional information.
Oh, the interest. Oh.
Eish,
Yeah.
sorry for that.
We are tired, maybe. What about the interest?
The question is, sir, sorry, where should that be calculated? Would that not form part of the gross profit calculation? Would that then rather form part of the net profit calculation?
Yeah, that one will form part of the last part when we calculated profit or loss for the year.
Okay,
That interest will
that
form
is just
part of.
extra information that was given to us, same like number B, that was just extra information given to us, which we'll use. If we did the entire statement of profit and loss, then we would have included that, but because we only did the top part.
Yeah, remember this one of stationery on hand will form part of your current asset in the statement of financial position.
Okay. I think it's just important for us as students to realize sometimes the additional information is just that. It's not necessarily for us to always know that we have to use all of the additional information.
Especially if you understand what is stationery, the difference between stationery on hand and stationery expense.
And to go on there with the tone of the students, yes, definitely that 650 would form part of other income. That means it's a line below gross profit.
Perfect. That's what I wanted to just clarify. Thank you, sir.
Okay, thank you very much.
There's a hand from, let me open the floor. There's a hand from Kilebogile. Kilebogile?
Oh, yes, on that same question.
Okay, let me go back to the question.
That's no, the revenue minus cost of sales. What that one?
Oh, this one.
Yes, that one. I didn't understand where we got the closing inventory.
This one. This is the closing inventory. The 20,000 is there and additional information. So inventory on hand, 30 June 2024 is 20,000. Year end, because remember, this is the opening. Inventory 1 July is the beginning of the current financial period. This is the opening inventory. 30 June is the end of the current financial period. It's the closing inventory of 20,000. You mean this one? The 20,000 is the closing inventory.
Yes. All right, thank you.
Oh, thank you. Marisa, is there any questions?
No. I was just responding to the on the charts. There is nothing on the charts at the moment. I think Kilebuhile probably is an old hand. I'm not sure.
Oh, yeah.
I think you can close the class, Chair.
Okay, thank you very much for attending the class. Remember, assessment 4 is opening tomorrow. don't worry. If maybe you didn't do well in assessment 2 and 3, there's another opportunity on electives assessment 5 and 6. The highest mark between assessment 2, 3, 4, and elective 5, 6, 7 will contribute towards your final mark. Please keep sending those questions if you are still struggling. We are here to help you to pass the module. The e-tutors are here also to help you pass the module. Good luck with assessment from tomorrow on. Remember, check the timetable for the next class. The timetable for the classes, we put the timetable for all our classes under additional resources folder on the module site, FAC 1502-24-S2. Thank you very much for attending the class. Good luck with assessment 4. Maraisan, is there anything you want to add?
No, sir. No, I have nothing to say now. Thank you.
Oh, thank you for attending. Bye.